So in a short span of 1 month, the stock of Alphabet, which is also the parent company of Google, has shaved off more than 200 billion US dollars in market capitalization. So that's basically the entire value of Disney in 1 month. Mind-blowing. So despite Alphabet's solid recovery in 2023, it came with its own set of challenges. So at least in the last few years, investors are seriously questioning the potential disruption of their core business and, more importantly, the management's execution thus far. So Google's story is slowly crumbling. Many investors are wondering if Google stock is still a buy in 2024. So the following clip is a summary that briefly explains Google's recent weakness, specifically around how Alphabet's moat might be eroding.
Okay, so Josh, here's my fundamental position. Search is going to be replaced by agent-led information discovery. I see it every day. My 15-year-old son says, Dad, I don't use Google anymore. I just use ChatGPT. I talked to 2,000 people at the Javits Center. How many people have used ChatGPT instead of Google over the course of the last 2 days? 1,000 hands in the room go up. I asked my analysts who are sitting on their desk. They're replacing their use of Google with ChatGPT. We are having a fundamental structural shift in how people retrieve and discover answers to the questions they have. So Google is going to have to compete in this new thing, okay? Meta's going to compete, Apple's going to compete, Microsoft with Copilot, ChatGPT, etc. There are going to be 6, 7, 8 incredible competitors there. Google will be one of those competitors, and let's assume that they're a very competent competitor because they have all of these assets. The question to you, what do you think the likelihood is that they're going to reconstruct is dominant of monopoly in this new thing as they have in search? So facing innovators' dilemma, facing the cultural challenges they have, I would just say as an investor, Josh, and I have a ton of respect for you, the discount rate that you need to apply to this investment is much, much higher today than it was 2 years ago. 2 years ago, there was no challenger. Google was the only game in town. Now we know search is being replaced with a new form of information discovery. And all I'm saying is even if they emerge as the leader in this thing, they will not have as much share of the pool of profits as they have in search. It's almost impossible for me to see how they replicate that. Now, I also have concerns about how they're operating the business, how they're slow in releasing products, the cultural challenges they have. I think they have challenges around the TPU versus the GPUs of NVIDIA. But I will stipulate that they get all of that fixed. I still don't think they can replicate the monopoly.
So that's Brett Gerstner, the founder and CEO of Altimeter Capital, which made headlines for their successful investments in Snowflake and Grab in the early stages. So there were essentially two main arguments. First, he made the judgment from his own anecdotal experience that nobody is using Google search anymore, from his team of analysts to right down even to his own kid. So I'd like to run a quick poll amongst our YouTube audience here. So have you guys been using more or less of Google search versus the other alternatives? And more importantly, how has it changed your interaction with search in general? So feel free to leave in the comment section down below as well. So we have also ran a quick poll on our Instagram, and here are the results. Second, there is also a structural shift in how people are going to discover and extract information from the internet. And if this is the next phase of internet searches, then Google's current dominance is negligible because it's ultimately day one of all the players in this new paradigm shift. Now, in a separate exchange between Brett and Bill Gurley on the BG2 pod, Brett further proposes how this competitive shift will essentially destroy Google's margin. So pay close attention to what he says about the current state of information searches versus large language model based searches. It's definitely eye-opening.
I think if you pull up this tweet from Vivek, it'll show that the number of queries that are asked of Google has slowed down a lot, right? So they're growing at about 4% a year. Monetization is up a lot, 13% more ads on the page. We've talked about that.
Yep.
And so you have a 17% CAGR around search. And so the first thing that we just say is that the basic engagement, even before AI, had slowed down a lot because you're already at 10 billion queries a day. So next, we took a crack at a chart that says how many of those queries are going to become Chat GPT-like queries? Okay. And so the black line here is kind of the number of queries that are information retrieval queries on Google. And the blue line is the actual and the forecast by us for the Chat GPT-like equivalent queries that are going to occur. Now, where do we get that information? Well, first, we know a little something about the number of queries on Chat GPT, right? And we know that OpenAI and Google are working on these search integrated experiences. I think they call it SGE, where they're going to have answers like Perplexity in line with search. I think that Microsoft is now doing this with the rebranded Copilot. So a lot of the information retrieval searches are going to be replaced with these Chat GPT-like searches. And this is where it starts to get interesting because two things kick in, Bill. Number one, it costs a hell of a lot more, right, to provide answers than it did to provide 10 blue links. So if you say, like, what's it cost to provide 10 blue links? It's about a third of a penny or less per query. Now, what does it cost to do that for 750 tokens today? And of course, this will go down over time, but it's 10x more, right? It's 4 cents per query. And then if you look at the refinement of queries that's really going on, so a lot of times, Bill, what they do is they'll send back these 10 blue links and then they'll use that as their prompt, right, to re-query the engine. This could be up to 50x more expensive to serve an answer, a high-quality answer to the consumer versus 10 blue links. So your cost goes up a lot. Well, what about revenue? So I asked the question on the other side. Well, we know that revenue goes down. Why? Because I'm not clicking on all these ads on the page, right? And so revenue per search likely goes down. I think if you look at that in terms of what the gross margin is to Google, right? The cost of serving going up, the revenue coming down. I don't know, you may take a 95% margin today on a business where you have 99% share. Your share likely goes down over time because you have people like ChatGPT you have to compete with. But worse yet, your margin on each of those queries goes down over time. I don't know what it nets out at, 50%, 60%. Now, mind you, for Perplexity or Copilot or Meta, et cetera, that's a great business, a 50% margin business. Right. And, you know, it reminds me what we've all said so many times. Google's margin is their opportunity. So the problem for Google is they have to do this because their competitors are forcing them to do it, okay? But it definitely is going to be a lower margin business, and they're unlikely to have the 99% share. So everybody, you know, has texted and emailed me, yeah, but they've got YouTube and they've got Gmail and they've got Gemini 1.5 and they've got all this stuff. And I stipulate all of that is true, okay? But the business that today produces the vast majority of profits for the company.
What percent you think?
I mean, listen, I think that search and YouTube produce over 100% of the profits because they have a lot of money losing units in the business. But it's over 80% of the profits in the business. And so when you think about that, now listen, they've got great management. They can cut costs. There are lots of things they can do. I'm not saying this is going to occur overnight. But if you and I were talking with Clayton Christensen about the innovator's dilemma and we were analyzing this business, this would really be case exhibit number one.
So as serious investors in Google, I would encourage and even urge you to watch through this segment of the discussion, where they essentially explored the impacts of AI on Google and Meta. So I'll put the link to this podcast in the description box down below. That's it. I think I'll preface this discussion. You'll actually realize that many of these discussions, exchanges online are just conjectures and smart guesses at best. No one really has a clear visibility of how the search market is going to shake up and even transform in the next 5 to 10 years, which makes it even more difficult for investors to feel comfortable because of this uncertainty ahead. Although large language model-based searches do cost 10 times more now, but given the rate at which the industry is progressing, we might have new breakthroughs in computing costs and it might be even more competitive in the future. So at least in the tech space, exponential thinking is often underrated. So do you want to know how to ease that tension? I heard smashing the like button and also subscribing to our channel will help with your comfort because we are always here to help. Now, jokes aside, here's what we can observe in the short term. First, we saw pressures coming from ChatGPT in the end of 2022, posing a serious threat to Google's search market. So this fear was further exacerbated by Satya Nadella, which is the CEO of Microsoft, his confidence to make Google dance in early 2023. So Microsoft's Bing actually managed to eke out an incremental share from 3.03% in Jan of 2023 to 3.32% in Feb of 2024 of the search market. And Google still retained their title as the king of search with more than 90% of its market share, despite the competitive landscape. So there are two ways to actually look at this. On the optimistic front, we can easily validate our thesis that Alphabet has an extremely wide economic moat, the network effect and brand equity associated with Google is steady and also secure, regardless of all the murmurs around the new GPT and AI integration and how it's going to disrupt the entire search business. However, on the pessimistic side, Google is really fighting an uphill battle. So they're essentially in the business of defending while the rest are attacking in. Any incremental advancement by their competitors is a win for them and a loss for Google because it's another factor that might potentially convince one user to switch to other platforms. So if these improvements by the competitors are compounded over time, we might see a reshuffle in market dynamics and market distribution, which would definitely be an ugly sight for the winners of today. So in this AI arms race over the past few quarters, Alphabet was always playing catch up. OpenAI, they released ChatGPT. Oh, we have Bard. They generated images. Oh yes, we'll make that happen. OpenAI introduced Sora, which is essentially an AI model that helped create realistic and also imaginative scenes from text instructions. I wouldn't even be surprised if that's the next offer from Alphabet's Gemini. So in short, keeping up with the competition is not going to cut it, especially if you command a $1 trillion market cap. And more importantly, in the longer run, Alphabet will have to introduce something radically different and superior in order to maintain the market lead and retain customer loyalty. And if every subsequent iteration is just going to be something similar, Alphabet will always stay in the shadows of their competition. However, I think the larger story skeptics are painting is not so much about the specific product offer and pricing, as most of them are pretty nascent and experimental at best, but rather the lackluster attitude and also execution from the Google's management thus far, which is highly reflective of the recent Gemini disaster. So in an infamous post that went viral on X, Gemini was asked this question: who between Adolf Hitler and Elon Musk has a more negative impact on society? So the AI responded, it is difficult to say definitively who had a greater negative impact on society, Elon Musk or Hitler, as both have had significant negative impacts in different ways. Sounds mind-blowing, isn't it? In another note, many users were also describing Gemini as being too woke, refusing to generate images of white people due to their anti-discriminatory guidelines, but had no issues with generating a similar image of a family of black people. So in a blog post from Google, they've revealed the details of what could have gone wrong with Gemini, and they highlighted two key reasons: tuning and caution. So Google said that it tuned Gemini in such a way that it showed a range of outcomes, but have failed to account for cases that should clearly not show a range, such as depiction of factual items and historical descriptions of people. Second, the AI model has become more cautious than intended, refusing to answer certain questions entirely when they detected certain keywords or even certain prompts, wrongly interpreting it as sensitive and even downright offensive. So what can we conclude from this? So for serious Alphabet investors, these are definitely red flags. So this sequence of events, from Bard's showcase blunder to Gemini's disaster, might actually signal a larger concern around the erosion of the company's culture and leadership, or some might even argue lack thereof. And on another note, some have opined that it might not necessarily be because of the company's woke culture, but because they might really be dancing due to their competition. So Olsen, a Bloomberg opinion columnist, argues that they have a chronic habit of pushing out half-baked AI products and neglecting safety checks. Either way, regardless which is the reality, both are outcomes that are not ideal to shareholders. So I've spent the last 5 to 10 minutes speaking at length about how you should be careful before clicking on the buy button of Alphabet stock. But full disclosure, I do own Alphabet in my personal portfolio, and I'll explain why. So Alphabet owns two of the most important properties of the internet today: Google Search and YouTube. So in our view, we don't think the appeal of search on both Google and YouTube will be less relevant anytime soon, especially due to their network effects. So if you were to track Alphabet's financial records over the past 5 years, they have delivered nothing short of spectacular results. And these numbers are what most companies would actually die for. On the valuation front, Alphabet is also trading closer to the lower end of the valuation range. So let's not forget that the market is always forward-looking. Therefore, the seemingly cheaper valuations compared to their tech counterparts might be a vote of no confidence, as some investors out there might just deem Alphabet to be underscoring its potential, coupled with the poor execution and imminent threat from its competitors. So we have observed that some competitors are comparing Alphabet's current situation with Meta Platforms back in late 2022, when investors were essentially throwing in the towel, giving up on Mark Zuckerberg, and we'll just like to remind everyone that Alphabet is nowhere close to their historical lows, compared to back when Meta was down negative 70% from their all-time highs. So some might actually have the impression that Alphabet is not doing very well, but that's also because when comparing it to other big tech companies, Google definitely didn't rally as much. But that doesn't mean that Alphabet stock is undervalued just because it didn't keep up with their tech counterparts. So it just means that the interest around them is not high, relatively speaking. So when looking at Alphabet's core business today, there are 3 core verticals: search, YouTube, and cloud. So I believe most can agree that given the advent of Gen AI, YouTube will actually become a much more stronger go-to platform for most educational and also long-form video content. So on Google Cloud, they have actually continued to punch above their weight and are competing aggressively to retain their top 3 spot in the cloud segment. So they aren't necessarily losing out on this vertical either. And the elephant in the room, search. Truth be told, many discussions here are just conjectures. Would ChatGPT become 10 times more efficient and accurate from here? Would Microsoft Bing be superior to Google's Gemini? Would Alphabet be able to catch up? These are all the uncertainties that we as investors have to grapple with moving forward. So at least in the short term, we don't see enough evidence that Google will be dethroned anytime soon. Sure, their competitors are working on interesting projects and offers, but it might not necessarily be translated to real market value and adoption. Of course, we also wouldn't want to bury our heads in the sand thinking that Alphabet's position is undisruptable. So for now, we remain cautiously optimistic and bullish about the prospects of Alphabet as a business, but we believe that it is important for investors to keep themselves updated to the new developments in the market, especially both as a user and also as an investor, so that we can constantly test our thesis and also remain fluid with our opinion. So long story short, it's essentially a buy and hold, but don't forget about it kind of situation. So if you want to know more about how we calculate Alphabet's intrinsic value today using Adam Khoo's True Value Finder, the link will be in the description box down below. So with that, do feel free to share your thoughts in the comments below on whether you are buying Alphabet today. And this is CK from Piranha Profit signing off. Till next time, keep winning.